Good morning.
Good morning. Tell me, is it as great a time right now for PSU banks as well? Because when we talk about, how earnings have been in the previous quarter, pretty much across the board, we have seen credit growth concerns. Are things now looking up for PSU banks in particular?
Yeah, I think the lot of initiatives which has come from the government side and from the Reserve Bank of India side, I think I'm very hopeful that we will be seeing the good traction going forward, and especially the remarkable the GST reduction which has happened in the various segments. I think definitely that is going to boost the retail credit, MSME, agriculture, because all those sectors have been benefited with the GST cut. There are two ways of looking into it. That one is that with the rate cut and the majority of the consumption item, day-to-day item, the cut means it has been made to zero now. And even the sector like the vehicle, machineries, and other household items, which falls under the retail segment, there also a lot of reduction has happened from 28% to 18%, 18% to 5%. So definitely, I think disposable income of the people that is going to be there now. It is going to increase, and with the 100% repo rate cut which has happened, for which all of us we have already passed on these benefits to the repo rate linked accounts. I think definitely with the lower interest rate regime and the GST cut and the liquidity also is there in the system now. The overall liquidity in the system and the CRR cut which is going to be implemented from this month onwards till December. Definitely that 100 basis point cut also is going to bring liquidity. So all those things put together, definitely we will have a very, very sound credit growth going forward.
Okay, but Mr. Chandra, do you think that because of the GST rationalization and the new effective tax rates coming into effect only September end, the numbers for PSU banks would only reflect in the Jan quarter and not on the upcoming one?
If I can talk about our bank, I am seeing a very good traction happening in the MSME segment because of 2-3 things. One is that budget announcement which had come, and in that a lot of good measures were announced in the different segment, and in MSME also. The credit guarantee, which is increased from 5 crore to 10 crore. The startup for that guarantee was 10 crore, which has been enhanced to 20 crore. I think all those things I am seeing in my bank that it is coming out with very good traction in the MSME segment. And I'm expecting a credit growth in the MSME segment to the extent of around 18 to 9% YOY. If I can talk about the retail also, there also I'm seeing a very good traction happening now. In this particular quarter itself. Yes, it is right that the actual impact of the GST will be implemented from 22nd September. So going forward from October onwards, there will be further 1 to 2% growth, credit growth will happen in the system.
Okay, so that's the outlook coming in. Mr. Chandra, hi, morning. This is Nehi also joining in. We've spoken about credit growth, but let's talk about NIMs and the way we've seen performance coming in from banks in Q1. For how long do you expect NIMs to remain under pressure? What is your outlook for the recovery? And also regarding higher credit costs that you've just spoken about, any timeline for their normalization?
If I can talk about the NIM, definitely I think earlier also I had shared this to the different at the different forum that in the Q2 also the NIM will be subdued because the credit interest rate reduction which were linked with the repo, already it was passed on to all those repo linked accounts immediately on the next working day in our bank. So that impact on the interest income has already come now. But all those deposits which we had garnered for 9 months and 1 year, I think that is getting repriced, and that impact which we are going to see in the system from Q3 onwards. So Q2 will be as it was in the Q1. In our bank, I am seeing that. So we had 2.8, so we will be in the same range in the Q2. But going forward, definitely, I'm expecting that Q3 onwards, there will be a good jump in the NIM, and we will be reaching somewhere around 2.9%. So that is about the NIM part. And your other question was related with, I think, the credit growth you were talking about, right? Overall.
Cost normalization timeline, if you could put any number to that, when can we expect credit cost to see some normalization?
Yeah, see, credit cost also, if I can talk about my bank, already we are having 0.14%. It is one of the lowest in the banking industry. And already the guideline which we have given for the entire year, that will be below 1%. And in this quarter also, the slippages and which is happening in the system, we are already on the track now. So I'm not seeing any further the downturn in the slippages front, and if the slippages are under control, definitely the credit cost also will be restricted. So I'm expecting that credit cost will remain in the range of around 0.3 to 0.4% in the Q2 also.
Along with that, Mr. Chandra, how will the phased implementation of CRR cuts affect the banking sector's liquidity management and deploying excess funds as well? If you can give us some sense there.
See, we have this impact in our bank to the extent of around 15,000 crore starting from September to December. So 15,000 crore liquidity is going to come in our bank. And we all know that whatever the liquidity that is coming on account of cut in the CRR, we are going to use it for the credit part. And definitely we are going to make the interest income out of this entire liquidity. And we have a good portfolio under the corporate credit, which we have already sanctioned during this year. And the last year sanction also, the disbursements are likely to happen. And in my last interactions also at different forum, I had indicated that we have a sanctioned pool of 1.3 trillion, 1,30,000 crore is the sanctioned pool which we have. And it is likely to be disbursed during this quarter onwards. So when we have the excess liquidity in the system, I think this will be going to give good income in the long run then.
How do you see, Mr. Chandra, your loan mix actually shaping up for the rest of the year?
See, right now we have around 54 to 55% RAM and around 44 to 45% the corporate book is there. And we have already set a target for ourselves that we will be moving towards 60% RAM book and 40% corporate book in the long run. And I'm expecting by end of this financial year, our RAM book will touch around 57 to 58% and 42% will be the corporate loan book. And bank has initiated a lot of activity for the retail, agri and MSME, a lot of outreach activity planned. We have already done those exercises, and going forward also, we will have the lot of outreach activity in the different locations in the country. And we are finding a good traction out of these activity.
Okay, here's to better times ahead. Mr. Chandra, thank you so much for your time today. Thank you for speaking with us.
Thank you. Thank you very much.
Okay, that's the word coming in from PNB. Things looking up deep.